Welcome to this session. I think this is the very first session that I'm doing with my BDA students. These BDA students who are new to RCM, I'm so sure they have never seen this face, so probably they have never gotten to know this man. I'm, of course, the Chief CPA Ninja. My name is Dr. Joshua Aura. You'll be seeing me often in your classes as the semester progresses. Now, ladies and gentlemen, this is basically about December 2024 exam. And I would want to use this December 2024 BDA exam to simply give you an orientation on what you expect in this paper. A candidate who will pass this BDA paper should be able to demonstrate capabilities in financial management. You must be very good in these net present value calculations, WACC, if you remember those things. Even if you don't remember them, we shall be able to remind you how to do them in BDA classroom. Capabilities in financial reporting, hey, here you have to do some published accounts. We expect you, ladies and gentlemen, in terms of financial reporting, to be good in group consolidations, cash flows, etc. You must be good in management accounting. You shall prepare budgets here in BDA. And now you are preparing them in the environment of what here? In the environment of Excel. I mean, I'm just giving you an overview. It's not just about budgets alone. There are so many things in MA. For example, they will tell you, they'll give you data, they'll ask you to calculate number of units to do what you have to break even. You'll be required to be good in auditing and assurance. So under auditing and assurance, for example, you'll be given a big trial balance out of which they expect you to extract financial statements, which will be audited. Financial statements will be done what year to be audited. All right. Then we have, basically when we talk of BDA, it's your CPA knowledge. Your CPA knowledge for the quantitative papers, but now this time around we'll be applying it in an Excel environment, Now, please allow me to just come and demonstrate something here. All right. So I will start by first of all sharing the link with you. Not the link, but the document. I would want to give you the document here. It's called BDA 2024. So please confirm that you are able to see that Excel. I've attached it in the group chat here in Zoom. So please download it pretty fast. Download it pretty fast. Yeah. So once you download this, these are section 2 questions. Yeah, under section 2, you'll be able to see here. Yeah. So like this is a financial reporting question where they wanted us to do a common size financial statements. This second question of section 2, we are looking at financial management. Question number 23, we are looking at preparation of what year? A cash budget. So we have financial reporting, financial management, and then we have management accounting. So these are compulsory. From there, you come to question number 24. So question number 24, what do we have here? Again, they are taking us back to what here? They're taking us back to taxation. No, this taxation, total current tax expense for the year, net, so taxation, all right? And then we have question number 25. Question number 25, briefly, do an audit what year, report summarizing, etc. testing. So audit. So you can see question 21, question 22, question 23. These are compulsory. And then you shall come and select between audit and taxation, which question in this case is much easier for you. All right. So one thing that I would want to tell you from the word go, don't come here with that notion that most of you have always come here with, where you come and tell me that Mwalimu, I never did auditing and assurance as a specialization, and therefore I will not study auditing and assurance totally. That will be disastrous for you. Because like now last semester, the auditing and assurance question was quite tough. It was tough for everybody, including students who had done audit as a specialization. They were not able to do this audit question because your examiner is not closing you up. Your examiner is not close to the fact that you can only do questions from the papers that you specialized. I like encouraging my students here to have an open mind. Whenever they are coming to BDA, have an open mind that will be able to learn information. You'll be able to get, even if this information is being taught is not from your paper of specialization, you just study it. After all, you're only required here to study something small from each of these papers, and then you use that knowledge to just pass an exam. Because you may say that like last semester, you'll not study tax because you never did taxation. And then they bring a very easy, like last semester, a very easy taxation class. So here, ladies and gentlemen, you are coming with that attitude that you will be able to study everything. All right. I have seen students who are telling me that, Mwalimu, tell me when you will be teaching taxation concepts so that I don't join that class. I ask them, why don't you want to join? And you know, me, I never specialized in tax. Why should I join those classes? And then you realize that that semester, the tax question they brought was quite an easy question, where they simply give you like information, then they tell you, prepare a wear and tear schedule. Even if you have never done tax at all, if you attend our, say, 3 or 4 classes of taxation here, you'll be able to understand that. So please don't limit yourself. That is the first advice under this orientation class. Are we understanding each other, ladies and gentlemen? Are we understanding each other, ladies and gentlemen? Yeah, I would want to get feedback from you that you shall not run away from any class. Great, great. You shall be able to do all classes. Now, I've seen some students talking about financial modeling and data analytics being done by CFA. No worries at all. The first 3 chapters are the same. We shall only deviate a little bit over the last 2 chapters. So you're still at home here. You are still at home here. All right. Actually, when I will also be looking at your past papers, when I solve them, the BDA students will be joining those sessions. They again don't run away because that is not the BDA. The same thing. All right. So the document that I'll just share it very fast here, ladies and gentlemen. So we have here BDA. And please, when other students come who don't have the document, I will implore on you to share that document with them on my behalf, so that I'll not be, for me to share, it means, first of all, I have to close it down. Yeah, great. Great. So come back to this document here. Question number 21, WorkWe Limited. I've done this question and it's on my YouTube. I've already done this question and it's on my YouTube channel. You simply go to Joshua Aura, the one that has got about 45,000 followers. And thanks to you guys, I never imagined that one day I will have 45,000 followers. How I wish. Once you guys get to Joshua Aura on YouTube, you can subscribe, all of you, and then you take me to, if I can get 100,000 before the end of 2025, I will be very, very happy. YouTube is my pension plan, imagine. My perfect pension plan is YouTube. Yeah, they're giving me something nice on a monthly basis, and I know it can become better. It can become better. So then I would want us to look at question number 22. As a quick orientation, it's question number 22 that I'm doing. This financial management, and all of you will be able to understand what I'm doing here. Now, ladies and gentlemen, if you give me this kind of a question that came here last semester, they have told me here, the following data relates to the launch of the product. It's called Mustard Limited is planning to launch a new product branded Malinex beginning January 2025. Additional information, corporation tax will be charged at the rate of 30% and is paid annually at the end of the same year when tax is earned. Tax will also apply on the disposal of the machine at the end of the project's life. Depreciation is the same as capital allowances. Working capital of 20 million will be required at the beginning of the project. This will increase at shillings 5 million for each of the 4 years and then released at the end of the project life in 2029. So they wanted me to compute ROI, and then we compute the projects after tax cash flows over the 5 years, plot a graph of the project's net present value profile, given the WACC ranging from 1% to 15%. Then they want us to determine the project's internal rate of return. And then we compute the project's profitability index at 10% WACC. This is an orientation session, and my orientation today is basically centered on financial management, and you guys must be able to remember the financial management concepts. I mean, we shall be able to take you through the financial management concept that we taught you guys, right? So basically here in this particular class, I would want to do net present value, and then I draw the graph. If I do that within 30 or 40 minutes or so, we should be good to go. The very first thing that I will do, ladies and gentlemen, you know, I've always gotten students who like doing, I mean, it's allowed that you can do, in this case, your solutions under these same worksheets. If I'm the one doing this, I'll simply come and copy everything here. Once I click here, I want to highlight the entire table. I can highlight it in mother tongue like this, or I can come, just click there, say Control Shift. I'm holding on to them using these 2 fingers of the left hand there, Control Shift. I'm holding on to them permanently. And then there are 4 navigation arrows. The 4 navigation arrows, one looks up, another one down. Then we have one that looks at east, another one at west. I'm clicking the one that looks at what here? East. Just slowly once, and then I release one like that, slowly. And then I start hitting the one moving down. Yeah. So I've been able to highlight everything there. For now that you have not mastered these shortcuts, just come and highlight these using mother tongue. Just highlight it. All right. And then come here, ladies and gentlemen, straight away say Control Copy to copy this table. And then open a new worksheet. You can see down here there is a place with a plus. So just open a new worksheet. Click there. Paste everything here. Control V to paste everything there. You do Control what here? Control V. Control V. So once you do that, you realize that there are things here which are not able to fit. The cells are what here? Smaller. So then how do I make sure that these cells expand? Oh, very easy. Very interesting. I'll be able to highlight the entire sheet. There are many ways. I'll be able to come here. This one, there's an arrow pointing down. This one here. Here. You just put this plus, the big plus, and then you click once. And then the entire sheet is highlighted. Once the entire sheet is highlighted, then you'll be able to come in between AB, between BC. Just double click. And then now the entire sheet expands. Oh, so nicely. The entire sheet expands so nicely. Now I can see all the figures. So from there, the next thing that I will do, this sheet 1, I must rename it. I must get into this culture of renaming my sheets in a way that the examiner will be able to follow. When we mark this BDA, students keep on complaining that markers are bad. No, most of you are not very well organized. It's like, now, how can I continue working on this sheet without labeling it? If I'm the one doing this exam, I'll simply come and right click. And then I say rename. So rename, I'll be able to say that this is Q22 question 22 solution, question 22 solution, like that. Question 22 solution. Now, ladies and gentlemen, assuming, I'm first of all giving you an example here. I'm given profit before depreciation and tax of say 30. I'm given depreciation. I'm given depreciation here of say 20. I'm given tax of say 30%. I'm given tax of 30%. And then somebody comes and tells me, hey, I want you to give me PAT. I want you to give me PAT. So how will I be able to get this PAT? Because basically, for me to be able to get net present value from this information that the examiner gave me, I will need to do a cash flow statement. I will need to do a cash flow statement. All right. So I need two things here. I need PAT, and then number two, I need cash flow. I need cash flow for this year. I need cash flow for this year. Control down that question mark to appear, and cash flow for that year. So there are many ways of doing this. One of the ways of getting this cash flow is to get the PAT. So then how do I get to determine this PAT? It's really easy. Come and pick, in this case here, this profit before depreciation here. So we have this PBDT. It is 30, ladies and gentlemen. Right? We less what here? We less depreciation. Come and less this depreciation amount. Less it. So this depreciation, how much is it? It is 20. All right. So because I would want to less, I would rather capture this as a minus 20. Minus 20, because I would want to less. Ladies and gentlemen, once I reach here, I want to get PBDT. PBT, profit before tax alone. So how do I get this profit before tax? I will take this minus this. But you see, already depreciation is minus. Already depreciation is minus. If I say 30 minus, you'll end up adding. So in this case here, I would want to do what here? To add the two, such that if I say 30 plus minus 20, at the end of the day, I will end up subtracting. I'll be able to teach you so many shortcuts here. The first shortcut of just adding the two numbers is to come and say Alt. You are holding onto Alt on your left-hand finger, here, Alt. You're holding onto Alt. There is Alt near Control, and then you say what here? Equals. Alt equals. And then you are able to get this PBT of 10. Once you get this PBT, ladies and gentlemen, now you need to come and do what here? You need to come and less tax. So come here and give us the tax element. So come and less tax. So for me to get PAT. So how do I get tax? It's very easy. I'm taking this 10, all right, the 10 there, the profit before tax. I multiply these with 30%. I have my 30% here. All right. And because I've used the word less here, I would want this thing to be negative. And for it to be negative, I have to come and put negative just before what here? Before, or rather after equals, negative. Because I've used the word less. And then I'll be able to come, ladies and gentlemen, and say what here? Say enter. All right. So I would want to combine this and this to get my PAT. So I'll come and combine. How do I combine? I'm adding. Remember, I would want to add this 10 and this -3. So simply come and say Alt equals. When you say Alt equals, you are able to see where it is able to come under. You see, like now here, it is only taking one cell. But I would want this bracket expanded to also include this 10. So there is no harm. So what I need to do is to come here and go to the corner here and then just lift this up a little bit. Lift it up a little bit like that to have that 10 being in-house. All right. And then once I do that, then I should be able to enter there. I'm able to get my PAT of 7. Now let me ask you guys a question. Once I get PAT, how do I change this to cash flow? How do I change this to cash flow? Can somebody talk to me? How do I change this to cash flow? Once I get PAT, how do I change this to cash flow? How do I change this to cash flow? Once I get PAT, how do I change this to cash flow? Thank you very much. I will come and add what here? So you say add depreciation. You add depreciation. Unfortunately, you can see depreciation here. You can either decide to type just 20 or you pick it. We just type for now 20 like that. So come down here and then you say what here? You say cash flow. You say cash flow. So cash flow, what am I doing? I'm adding the two. So the concept of holding onto Alt, you hold onto Alt. So you say Alt equals. You can see this one is nice. No, it has only taken up but one cell, which is 20. It's only been telling you here 20 alone. So you need to expand this just a little bit to ensure that you bring these 7 into the equation because you want to add PAT and depreciation like that. And then you say enter. So now you have your cash flow. This is method number 1. The easier method, which I would recommend and the one that I'll be using tonight, my friends, is where you come and take this PBDT. You take this PBDT of what year? Of 30. PBDT of 30. And then once you have this profit, go ahead and tax it today. Tax it immediately. So you come and say, less tax. You less, no. You less tax. So where is the taxation to be less? It's very easy. Come and say equals. You are taking this figure that you're taxing, you say times. So shift 8 times the rate of taxation. And because I've used the word less here, I'm going to have a negative there. All right. From there, I will be able to enter. Once I enter, I'll be able to now sum the two because this negative, summing the two is akin to deducting. So how do I sum? Very easily, it's Alt equals. Alt equals, you enter. Once you get this number, which does not have what here? A name. Never give it a name. Now, if you're using this approach, you'll come and add, in this case here, what we call a depreciation tax shield. You add a depreciation tax shield like that. Tax shield. Add a depreciation tax shield tab. How do I get this depreciation tax shield? It's very easy. It is depreciation times tax rate. It is depreciation times tax rate. So you'll come and say equals, you take the depreciation that you have here. No. Depreciation that you have somewhere here, 20. That depreciation, you say times shift times the tax rate. Depreciation tax shield. You take depreciation amount times the tax rate. And then you enter. And ladies and gentlemen, you'll be able to come here. You are adding the DTS. So what do you do here? You'll be able to come here and Alt equals. You can see now here it is only capturing 6 alone. Carry this up a little bit. Carry it one more step up there to put 21 in-house. And then you enter. Whatever you get here is what we call cash flow. Whatever we get here is what we call cash flow. Like that. 27, just like this. Ladies and gentlemen, I would expect what I'm writing here, you're also writing it from your end on the other side. Yeah, you're writing it from your end on the other side so that we can move together. But up to now, is there somebody who has been able to do exactly what Mwalimu has done? Anybody who has been able to do exactly what Mwalimu has done? Wow, great. Now, please listen. Please listen. Please listen. Please listen. Please listen here, ladies and gentlemen. And as you listen, I would want to welcome all of you who are here to join my not advanced, but business data analytics classes at RCM. You can never go wrong working with us. We are the biggest and we are never afraid. We are never ashamed of saying that. I mean, we are proud to say that we are the biggest BDA training center in East Africa. Like currently, if you take the early morning students, evening students, if you add them, we are over 300. And this is week number 2. So you expect like last semester, our total population was about 650, close to 700 students who are in early morning, evening, and students using videos alone. And they really passed very, very well. They really passed very, very well. So I welcome each one of you here to join this winning team. To join RCM, we charge Kenya shillings 9,000 for our Zoom and the videos. And then most importantly, what we sell here is a concept that none of these great competitors of ours, even universities that are teaching CPA that I have. The concept is that we have what we call a learning management system where we put our videos, put all our videos there. So students are able to get there and they even get to watch them before our classes. Yeah, the students who have time, they're able to know, for example, like tomorrow, we shall be doing financial management. So they get to financial management videos, they watch before we meet. On top of the LMS, we are the only college that is able to teach BDA students 6 times a week. From Monday, actually it's 7 times a week. From Monday to Friday, you have your teachers who are guiding you. We guide you from Monday to Friday, every day. If it's evening, 8 p.m. to 10 p.m., Monday to Friday. And then now Saturday and Sunday, we normally appoint some great students. Every semester we get those great students who will be able to take colleagues through what here? Discussion, practice discussion sessions here. Why would you want to also leave the ball to these students here also to touch it a little bit for those 2 days, Saturday and Sunday? Because you see, when I give you a great student in your class to guide you on Saturday and Sunday, that student will not be doing discussion throughout. I expect that student basically to be a leader. Every day they have to appoint like a student here to demonstrate what have you understood, what have you not understood. So when we keep teaching each other, we learn best. So it's really a concept that we are selling here, which is great, which has assisted so many students, to pass this great paper called BDA. So please don't hesitate joining us. Our number is 0719 525 000. 0719 525 000. I'll be giving you our pay bill number in a short while. So then this question, because it wanted me to give them net present value, what a good student should have done is to give us a cash flow statement. So give us a cash flow statement. You can see here, they've given us production quantities in units, and they've given us selling price. They've given us variable cost. So this is really easy. These are questions that I would have done if I were the one doing this. I would have not taken more than 10 minutes. So I will type in capital letters for everybody to see. I know at times I worked for some Zungu. Anytime I wrote something to him on capital letters used to tell me that I'm shouting. No, you have to shout simply because I would want you to see what I'm writing. So the first thing that I will do is to come and get revenue. So how do we get revenue? It is price times what here? Price times quantity. Price times quantity. Price times quantity. All right. So come and give me these revenues. So these revenues, no, I should have written somewhere here. Actually, what I should do, sorry for that, I should just come and write from here. Yeah. So that I fix these things depending on the years. I can even start here. Revenue. Sorry. So I have here revenue. So how do I get this revenue? It's price times quantity. Very easy. So come and say equals. I can see this quantity there times the price. Quantity times the selling price to get the money generated. Then I say control enter, or rather I can just say enter. Great. So remember, I want profit statement. Go to the second one. The second one that I would want to get here is variable cost. So come and give me the variable cost. Give me the variable cost. Give me the variable cost. So variable cost, ladies and gentlemen, what do we have here for variable cost? So what we have here for variable cost, ladies and gentlemen, what we have here for variable cost, ladies and gentlemen, I know how to get variable cost. To get variable cost, I will still say equals. I must start with equals when I'm doing a mathematical question in Excel. I must start with equals. So come and take this quantity and then I multiply this. So shift, I multiply this with variable cost per unit. Enter. From there, ladies and gentlemen, I'll be able to come and take next cost. The next cost I can see here is fixed cost. Fixed cost. So I will come here and say fixed cost. So we have here fixed what here? I have here fixed cost. So I have here fixed cost. So fixed cost. So the fixed cost that I have here, ladies and gentlemen, I'll come and say equals. I have this fixed, of course, fixed cost is total. I will not involve number of units whenever I'm getting total fixed cost. The only thing that I need to do, these figures are not in thousands, no. But you see now this fixed cost is in thousands. So what I need to do is to come here and say, I pick this 15,000 the way it is, and then I return the thousands. I return the thousands. So times 1,000 like that, I return back. So it's either I chop these thousands or I return thousands back. So I have fixed cost. So ladies and gentlemen, then what I need to do pretty fast, I will come here. Whenever you see this, it means that the cell is small. So if the cell is small, you can simply come back there and increase this width. Great. So remember, variable cost, I will be subtracting. Fixed cost, I'll be doing what here? I will be subtracting. So if that is the case, I'll simply come and put the negatives here, right? I'll simply come and put the negative after equals. I can as well work without negatives, but I always prefer it that way. Oh, I always prefer it. Escape. Yeah. So just come here and say negative. It's good to put those negatives there, right? Even this one, you can see the formula. Simply come to the formula here and say negative. Great. So once I do that, my friends, what I'll need to do very fast is to come and sum the three, because this will be taking the revenue minus now this variable cost minus the fixed cost. So sum the three. What do I do? Alt equals. Very nice. Very nice. Alt equals, very nice. So once I get this number, whatever I'm getting here is basically my profit before depreciation and tax. So two ways. I can come right away and say less depreciation. Less depreciation. So the depreciation that I have, I can see it here. So I'll come and say equals. It's in thousands. So I'll come and pick this. All right. I say times 1,000 to return the thousands. And then remember, because of less, remember to put a negative here because of less. Ah, very nice. Then what I'll do, ladies and gentlemen, I will come right away here and say what here? I will come right away here and say what, ladies and gentlemen, here? I will come here and add the two. No worries. I'll say alt equals. You can see now the thing of expanding because it has only taken this. So come and expand this. Just carry it a little bit. You carry it up a little bit like that. Please, if you're using this approach, don't give this a name. All right. You simply come and add, now, come and add what we call depreciation tax shield. Add depreciation tax shield. You're adding the depreciation tax shield. So how do I get this? It's very easy. You simply come and say equals. You simply come and say equals, equals. You have your depreciation here. All right. And then you can multiply directly with 30%. You say times 30%. I hope it's 30%, which is given there. I'll be able to see your questions just in a moment. Times 30%, like that. And then, ladies and gentlemen, once you do that, this I ought to have returned back that 1,000, yeah, times 1,000. I'll do it in all the ways, times 1,000, like that, yes, like that, yes, like that, yes. No, sorry. Here, I wanted to use this other approach. I wanted to use this other approach. Other approach. Sorry for that. You see, we have fixed cost already given. We have this PBDT. We should not have subtracted depreciation. I should have subtracted what year tax. Sorry for that. I should have subtracted tax. I'll use both methods, but just allow me to work with this. I should have subtracted tax here. So in this case here, equals, sorry for that. So you're taking the whole of this figure, we say times, in this case here, 30%, times 30%, like that. And then we enter, all right. Then we enter like that, all right. And then of course, this will be okay. Yeah, less tax. This tax is supposed to be negative because of the less. Now this is supposed to be okay now, all right. All right. So then now we have the tax shield here very well. So then come and add it. So when you add it, you'll be able to get your operational cash flow. So now we have what we call the operational cash flow, like that. So this operational cash flow, I can see it needs to be a bit bigger. Great, like that, yes. So this operational cash flow, ladies and gentlemen, what are we doing? We are doing the alt equals. So this alt equals, simply come and take this up like that. Then you enter. Like that. So now we have our operational cash flow like that. And now once you have this, you can come and highlight this entire column. All right. Once you highlight the entire column, simply come and copy this by the side. See whether these things will work for the 4 years, like that. All right. So I can see these numbers they're bigger, they're quite huge. So what I need to do is to come and highlight the whole Excel sheet, and then I double click somewhere here. Great, like that. So I have my operational cash flow like that. So do we have any student who has been able to reach where Mwalimu has reached? Because I'm going to give you a very, very good introduction, really. Is there any student, even a single student, who has been able to reach where Mwalimu has reached by any chance? Any student who has been able to reach where Mwalimu has reached by any chance? By any chance? Because all of us should be very aggressive. Right. I saw a few questions here. I always like working. Lost on the way. I'll be able to come back and pick it. Yeah. All right. Not really. Okay. I'll be able to come and help you. Don't worry. Now, ladies and gentlemen, once you've been able to get your operational cash flows, remember you have other types of cash flows. Who is able to remind Mwalimu the other types of cash flows other than the operational? Remember operational cash flows, these are the ones that come from where? These are the ones, ladies and gentlemen, that come from sales. So we have other cash flows. For example, we have here terminal cash flows. So we have here add terminal cash flows. So terminal cash flows are which ones here? Terminal cash flows, ladies and gentlemen, are those cash flows once you terminate the project. Once you terminate the project, we expect to get, like, for example, scrap. The first one here will be scrap. Scrap. Do we have scrap? You can see resale value. Resale value in 2029. Yeah, we sell the investment. So this resale value is here. So I'll be able to come and pick it from here. And then, of course, it's not it's in thousands. So if I'm using this approach, I have to multiply. It's a bad approach, but just allow me to make you guys to be comfortable. I don't want, when you go to exams, figures, other figures are in thousands. You should be able to know, when do I cut all of them? Or if, for example, I get myself, like now here I was returning the zeros, what should I do? I'll not panic. So like now I'll come and say times, because my approach is the one where I return, there are thousands. Do we have any other cash flow? Yes. We have in this case here the tax benefit. Tax benefit on disposal of can just write like the tax benefit on disposal. Tax benefit on disposal. Now, ladies and gentlemen, this one I need to calculate net book value. Net book value of this. Net book value. Let's calculate the net book value. So the net book value, I know that I've bought this project here for 500 million. Here. Yeah, 500 million. So I know, ladies and gentlemen, that I've bought this asset for 500 million. By the time I'm selling it, it has lost all these depreciations. So minus sum, it has lost all these depreciations here. It has lost all these depreciations, so I come and sum them. It has lost all of them. Close bracket, enter. So by the time, found a typo, no problem, just correct for me. So by the time, I know why the typo, yes, I know why the typo, no problem. It's because, let me just come and repeat. So equals, so in this case here, by the time, ladies and gentlemen, I'm doing this, so this is equals, so we have that 500,000. We say minus the summation of all these depreciations here. All right, then you come under, yeah. So in this case here, by the time I'm selling this particular asset, it has a net book value of 85,000. And then myself, how much am I going to sell it? What is the scrap value? What is the scrap value? This very asset, ladies and gentlemen, I'm selling it for how much, ladies and gentlemen? I'm selling it. I can see the scrap value. The sale value is here, this 70,000. So let me ask you a question. Am I going to make a profit or a loss? Am I going to make a... You can see the selling price is 70,000 and yet the asset is worth 85,000. So I'm making a loss or a negative profit. I can do it like this. I say minus this number. So when I make a loss, what does that mean? It means that I'm going to get a tax benefit. I'm going to get a tax benefit. That's what we call tax benefit on disposal. Not many students were able to do this last semester up to this stage. Not many. So in this case here, come and give us the tax. So the tax benefit basically will come here. So the tax benefit, the tax benefit, the tax benefit, the tax benefit. So the tax benefit, I'm going to take in this case here, the loss that I've just gotten here. The loss that I've just gotten here, I say times my tax rate, which is 30%. Tax rate, which is 30%. But now remember, this figure is in thousands, because all these are in thousands. So come and put it here. So we have here 4,500, return your zeros, like that. Now, ladies and gentlemen, then from that, we have in this case here what we call the initial outlay. The initial outlay. So we have here the initial outlay. So this initial outlay, you have to be careful with them. Initial outlay, you must be very careful with the initial outlay. You must be very careful with initial outlay. What are our initial outlays? So we have the machine cost. We have the machine cost. The machine is going to cost me, machine cost is going to cost me how much now here? This machine cost, remember it's a negative, The outlay is negative. So machine cost will cost me this 500,000. 500,000. I'll be able to repeat, don't worry. I can see you. Let me put 500 million. Apart from machine cost, what else do we have, ladies and gentlemen, my good students? Apart from machine cost, we need what we call something very, very important here. What else do we need apart from the machine cost? Apart from this machine cost, we need what we call working capital. This machine cannot come and just start operating by itself. You can see we have here working capital of 20 million will be required at the beginning of the project. This will increase at 5 million for each of the 4 years and then released at the end of 2019. Very good. So in this case here, we are saying, ladies and gentlemen, here that I'll be able to come here to my solution. I'll be able to come here to my solution, question 22 solution, and then I pick this working capital, WC, working capital. So remember, I'm putting this under 2024. So the first amount there is minus 20 million. The first amount is minus 20 million. And every other year, they have told us that every other year, we shall be having shillings 5 million for each of the 4 years. Each year, you shall be putting 5 million aside as working capital every year. No worries. So come here, you say minus 5 million. And now remember, I would want, in this case here, to carry this 5 million all through up to 2028. So I don't have to copy it. I'll simply come and drag this here. Yeah, 5 million. And then what is happening, ladies and gentlemen, here? Come 2029, we are going to recoup back our working capital. So remember, these are investments every year from here. So we're going to get back everything here. So when you add, how much are we looking at here? This will be 20 million as well. So at the end of the day, I must get back my 40 million in 2029. I must get back my money in 2029, 40 million. Now from there, ladies and gentlemen, what you need to do, and I'm now almost finishing in 10 minutes, all of you will be away. So remember, I've been investing here 20 million, 25, 30, 35, 40. And then this 40 million now will be a cash inflow to me. It will be positive. I'll be returning that back, my money back. So then you'll come here and create a column for total cash flows. Very, very important now. So we have now what we call the total cash flows, which now we shall be able to discount. Total cash flows, which we shall be able to discount. So Alt equals, come and carry this. If you want piece, because you want to add up to operational cash flows, carry it up to operational cash flows. Carry it up like that, up to operational cash flows. And then now you should be able to come and do what here, enter. Once you enter, come here and now sum everything. Sum everything up to there. Such that when you put your cursor here, and for example, you want to know the formula that was used to get this. If you want to know the formula that was used to get this, when I say F2, I'll be able to see that it has added the operational cash flows and any other cash flow in between, like that. So now my good students, I happen to be having my total cash flows that I'll be using for purposes of what here? For purpose of my NPV. For my NPV purposes. Now let me ask you a question. If, for example, we have here WACC, we have our cost of capital. So if, for example, our cost of capital here is 1%, very low cost of capital, and then we want to get net present value. We want to get net present value. How do I get this net present value out of these figures? Very easy. I have an inbuilt NPV. I will come and say equals, I say NPV. I'll repeat everything. I'll repeat everything. I just want you to see the bigger picture. I want you to see the bigger picture. So come and tab this. You can see the first thing they want me to do is to come and pick the rate. So the rate is this 1%. You say comma. The next one, they want me to come and pick all the values from value 1. From value 1. So from value 1, don't pick the original. From value 1 here, you pick all these. You highlight all of them. All right. And then you come and close. Once you take all the values you can see, they want you to close the brackets. So come and close the brackets. Don't forget that you are yet to put in this. So you must come and say here, plus. You must come here and say plus. So shift plus. You say plus this 520 million because it's already negative. because you remember it is net present, net of the original. Then you should be able to enter like that. All right. This was programmed to give me an answer in percentage. No problem. I will never panic. I will never panic at all. What I will do, I will come, ladies and gentlemen, here. And then, of course, I go home. I go home here. And then home, I don't want percentage. I want a general number or just a number like that. Now, please listen and listen to me very well before I start reading your questions. Please listen to me very well. If you look at, for example, what this examiner wanted in number 2, actually number 3, this examiner wanted me to plot a graph of the project's net present value profile given the weighted average cost of capital ranging from 1 to 15%. Great. So I'll continue. I love this. So what I will do if I'm the one doing this, I'll simply come and rub this. I'll start afresh because now I have to write this from number 1 up to number 15. Number 1 up to number 15. So we start with 1%. So we write 2%. We come and highlight these 2. Once we highlight those 2, then I'll be able to create my series down up to 15%. I will repeat that one, I promise you. Yeah, up to 15%. Then I'll be able to come and now get NPV for each one of them. So equals, I press NPV here. I say like that. The rate is this 1%. 1% is going to change. Then I come and say, comma. Pick the cash flow from year 1. These ones here. Pick them. And this cash flow being my range, they will be constantly held. They're not going to change. Those figures, the way I've highlighted them, they will not be changing at all. The cost of capital will change, but those figures will not change. So if they're going to be constant, what am I supposed to do, you my good students? If they're going to be constant, what am I supposed to do, you my good students? Yeah, lock these permanently. So function F4, lock. And then remember these values must be closed. You close bracket like that. You come and say plus this one, which must also be locked. It's going to be constant. I'm going to repeat this. So from there, you will be able to come and do what here? Enter. And once you enter, then you'll be able to come and just highlight this, just autofill up to 15%. You autofill up to 15% and you have your NPVs. All right. And then come now here. If I'm the one doing this, I'll come and say Control T. I have headers. And then I'll be able to come now, click inside here. And then I say Control Quick. Control Quick. I want a chart. Which chart do I want? Maybe I want a scatter graph. Yeah. So you have all your marks. Control Z. Yeah, you have all your marks. Can put this by the side. Yeah. So come and make a few changes here. Chart title, etc. And then they asked us for IRR. IRR will be in between here. Yeah. 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 Great. Great. So then are they ready? I start. And you know the beautiful thing of working with a table. Please allow me to repeat something here. Assuming, ladies and gentlemen, I never had these figures. No, actually, let me just go back to table design. This is my table here. Allow me to go back to my table design. And then I convert this to a normal range. Yeah, convert to a normal range. So no filter. So this is not a table now anymore. So allow me to create a table afresh. How do I create a table? Control T. Create a table. All right. So then come and compute this NPV afresh. So I'll come and say equals NPV. Tab there. The rate is 1%. I will not lock that one. Values 1 up to value 4, they're here. Fortunately, Control Shift. These ones I have to lock them. They are arranged for me. So function F4. I've been able to take all the values up. So I close bracket and then I say plus this one here. All right. The good thing of working with a table, when I say enter, it gives me all the values. It gives me all the values. Is there something I missed? There must be. I know what I missed. Let me just go back here. I never locked this. If you don't lock, I never locked this. If you don't lock, you get zeros throughout. I never locked this. So let me correct. So you can see like that. That's the good thing of working with a table. So now I just wanted you to see that, like, the bigger picture. Are they now ready to learn? I start doing this question from scratch. Are they ready to learn? Because the first one was for me just to show you the bigger picture. Are they ready to learn now? The first move was for me just to go through. Now I've gone through. Now I would want to repeat slowly. The students will tell me, Mwalimu, actually even allow us to just go and watch the video, and then we do this thing tomorrow when we are fresh. Other students will tell me, Mwalimu, now repeat. Let's do it slowly. Repeat. Let's do it slowly. They are ready, right? So we move now slowly. So then you have to do me a favor. First of all, as I repeat, all of us, do we have access to this table? Do we have access to this question? Because everybody must be having access to the question. Everybody must be having access to the question. Great. No. Okay, Stella, let me just come back and give you the question. I don't want to save nothing. I want to start everything from scratch. So we have here BDA. Karen, your answer came in very late. Your answer came in very late when others had made a decision. So please forgive me. We have to do it now. So I've been able to resend it, and now I believe everybody has access to it. All right. All right. So please remember, for the students who are watching this on YouTube, you need to support your Mwalimu by subscribing. You must subscribe. You must subscribe. So this is the question 22 that I'm doing. I'll move slowly, very slowly, because I want us to work it out together. Remember when we started, I told you today, I'm just doing net present value. I've seen somebody asking about return on investment. You know, if I teach all those things, I would really confuse you. Would rather just go slowly. Today we are doing net present value, and then tomorrow we can do something else. Is that agreeable with everybody? Or do you want me to do everything today up to profitability index? You must be geniuses. You must be geniuses if you tell me to do everything today. Yeah, I think the better strategy is that all of us, we just understand, like, how do we do NPV? How do we do NPV? That is the most important thing. The others gradually, yes. The others will be able to come. Yeah, the others will be able to come later. So actually, my most important thing is to show you guys how to get the project cash flows. And this question, they repeat it every year, every time. So please come here and carry this table. Carry it, all of us. Let's carry this to a new worksheet. So you say control copy, eh? After you highlight, you say control copy, and then you go to a new worksheet. All of us, slowly. Now I'm moving very slowly. You come under, paste it here, control paste. You can even use mother tongue. The figures you're not seeing showing up very well, you can expand this. You try to use mother tongue, you can expand this for you to see your figures, all your figures, like that. So then I would want us to do just our profit statement first, our cash flow statement first. So remember what you do, you will come here, my good students. All right, you'll come here, you know, already they have this. Actually, I should even expand this. I should as well expand this. Yeah. Yeah, I should expand this. Yeah. Yeah. All right. So you can see we have here, this is like time 0, time 1, like that. So what I will do, you see, I want my cash flow down here. So then down here, I must start, you can even write where these things are. Just write everything here. You come and write revenue. You want to get revenue, because I want, cash flow comes from profits. Profits is revenue minus all costs. So you come here for the first year. So you know how to get revenue. Revenue is price times quantity. So let me come here, escape. Let me first of all come here and say that revenue is price times quantity, like that. So please come here, equals. So you have this quantity times the price. And because I'm seeing some things are in thousands, the better thing to do is to come and divide this by 1,000. So divide this by 1,000. So that you have your figures in thousands. So this will be our cash flow statement in thousands. And the students in this case who are used to one figure, they keep on pulling. No, that's not Excel for you. Excel just do figures for 1 year and then you'll be able to pull later. So come and give me total variable costs, total variable costs. So the total variable cost, what are we doing? We are taking variable cost times quantity, or quantities. Variable cost doesn't matter, and it has to be in thousands. So come here, my good students, take the production quantity is the same. You say times, in this case here, the variable cost, which is 3,000. I will say divide by 1,000, and the variable cost is to be subtracted. So come after equals, put that negative there. After equals, put that negative there, enter. Enter. You can see a small negative there. After variable cost, I know I've got 2 types of cost. I have variable cost, I have fixed cost. So I'll come and mention here fixed cost. So fixed cost, I'm picking fixed cost the way they are. So the fixed cost, I'm simply saying equals. I say negative, I pick fixed cost the way they are here. They're already in thousands. Enter. After that, ladies and gentlemen, I know that the next thing will be for me to get a special profit, a profit that we call PBDT. PBDT. You haven't subtracted depreciation and tax. So this PBDT, come and put here, say alt equals. Alt, you are holding on to alt, and then you say equals, you enter like that. So I want to pause and ask, get to see whether there is anybody who is with Mwalimu up to here now. Remember, even if you did it correctly last time, the first time, we have to repeat again. We keep on repeating things for us to understand things. We keep on repeating things for us to understand things. For us to understand things. We keep on repeating things for us to understand. So are we together? Is there somebody who has been able to repeat? Now you can see those responses are very, very few, meaning that there are students who are eating ugali when I'm teaching so seriously here. When I'm actually sweating here with you, shouting here. The students who are eating ugali, and I can see you vividly. Kwanza ugali na mayai ile ambayo wameweka nyanya mingi kabisa. Mungu anakuona. Thank you so much. At least we are together up to here. Nobody has told me to repeat up to there. Now, after that, ladies and gentlemen, what do? We shall come and levy tax on this PBDT. Come and less tax. Less tax. So come here, say equals. We are picking these. We say times the 30%. Because I don't have 30% here, I will just type it. 30%. 30%. And now remember, because these are subtractive item, a subtraction item, I'll come and put a negative there. All right. I don't even have to sum these. Now what I need to do, ladies and gentlemen, is to come and add DTS directly. Add DTS. You don't have to sum this. So DTS is depreciation tax shield. You can write that in full. How do we get this depreciation tax shield? You take depreciation times 30%. Depreciation times 30%. Times 30%. So depreciation already we have it. So equals, we have this which is in 30, it's in thousands, remember, times 30%. Like that. Enter. And once we do that, then we shall be able to get what we call operational cash flows. Operational cash flows. So now come and add. What are we adding, ladies and gentlemen? Remember, it is these three already. Actually, when you say alt equals, this thing will guide you. All right. So you are subtracting this tax and adding this DTS onto this. So please know how to just take this thing up. You put it here at the corner, carry it up like that. Then you enter. Now that you're finished for the first year, come and do Lord's work, great work. Yeah. Autofill, then you take this by the side like that. And then let me know whether there is somebody now who has been able to reach here where Mwalimu. Now I'm so sure now it is a donkey downhill because now I'm repeating. It's a donkey downhill because I'm repeating. It's a donkey downhill because I am repeating. Great. Tuko pamoja sasa. Thank you so much. Mercy Kondi, Jane, thank you so much. Tuendelee sasa. Thank you so much. Now from there, I will come and ask myself, what other types of cash flows do we have? I know them. For example, we know what we call terminal cash flows. We'll terminate this project, two things. We shall have scrap value. Scrap value, money coming to us. So this scrap value is coming on project termination, just the last year, and I can see it is here, resell, this one here. You say equals, and then you click on this, you bring this figure down. Don't forget this, when you sell, there will be a tax benefit or a tax loss. In most cases, it's a tax benefit. Tax benefit. On sale of PPE. So then come here at the corner and get, this is what many people are not able to understand, but it's very easy. Get what we call net book value. So how do I get net book value? Initial cost minus accumulated depreciation. Anytime I want to get net book value, I will take initial cost minus accumulated depreciation. So equals, I know the initial cost is this, minus accumulated depreciation, this one. What am I doing? No, I should have added. Minus sum. Then all the depreciations added. Then I close bracket. So in this case, the net book value is 85,000. And I know that I scrapped this thing. I sold profit. So I know the price, the scrap value. I know the scrap value. The scrap value, the resale value. The resale value. So I know that the resale value is this 70,000. So that I'm able to get my profit, which in this case here is the scrap minus NBV. scrap what I'm able to realize. So it will be this 70,000 minus this 85,000. So I made a loss. When I make a loss, there should be a tax benefit. And the examiner has been able to speak to us through over the same. He has told us here, tax will also apply on disposal of the machine at the end of the project life. If you make a profit, you pay tax. If you make a loss, it's a tax saving. Yeah, so repeat on net book value. Repeat on net book value. NPV haven't reached that career. How did I get the net book value? The marks, yes. The entries you make, they really matter. The entries you make, they really matter, yes. They really matter. NBV. How do we get NBV? You as accountants. How do you get net book value? You as accountant, let's talk about this. Yeah. Let's talk about this. How do we get net book value? It's net of what? It's net of depreciations. Yeah, cost minus depreciation. So if you wish, for example, yeah, great. Yeah. So perhaps if you wish, you can come by the side here. You can come by the side here and then get total depreciation. Total depreciation. So you say equals, you sum. Make sure you sum. You double click on this sum. And then you come and highlight these depreciations. You highlight them like that. You enter. And then the cost. The cost is this 500 million. 1,000. Now I'm not adding back. And then I'm able to get net book value. Thanks for asking that question. I believe now everybody is able to understand this even better. Like that. Now everybody is able to understand it even better. And then now you have, this is the net book value, the value of this asset by the time I'm selling it, and it's worth 70,000. So then I make a loss or a negative profit. So then what is the tax benefit? I will take the 15,000 loss I made times 30%. So this is it. So you come and put it here. Equals, don't put it as a negative. You know, it's a tax saving because you made a loss. So whenever you make a loss, the government normally comes to cry with you. It gives you something. So can I continue now? Can I continue? All right. Now, apart from this, ladies and gentlemen, I have other types of what here? Other types of cash flows. All right. For example, I have working capital. Working capital changes. So working capital changes, I know that at the very beginning here, I'll be required to put in 20 million. So 20,000. Because I'm cutting zeros. And then every other year, I'll be putting 5 million, 5,000. Up to there. So see, I'm putting in 20 million at the beginning, 5,000 this year, 5,000 increase new year, 5,000. But remember now there will be what we call release of working capital. Working capital is normally returned back to you. That's what they have told us in this question about working capital. Working capital of 20 million will be required at the beginning of the project. This will increase at 5 million for each of the 4 years. And then released at the end of the project life in 2029. Oops, I never renamed my sheet. Okay. So then by the time I'm coming 2029, I'd put in 20 million. So 25 million, 30 million, 35 million, 40 million. So then what will be released back to me will be 40 million. So 40,000. And that will be positive because it's being released. The others I'm investing, but at the end of the project life, I get back my money. So up to here, ladies and gentlemen, are we somehow together? Up to here, are we somehow together? Up to here, are we somehow together? Great, great. You'll get used to this. Yeah, great. You'll get used to this. All right. So apart from these working capital changes, we also have the initial outlay, the initial cost of the machine. It will be here, initially when I begin. So minus, we pick the cost of the machine is given. See here. And then from there, ladies and gentlemen, I think we have everything. So come and give me the total cash flows. So total cash flows, how are you getting them? It's operational cash flows plus these are the cash flows. Operational cash flows plus these are the cash flows. So say here alt equals. Pick this thing up until you get here to operational cash flows. Then you enter. And then now you can come and take this by the side. Things will be okay. Like that. So these are the ones you come and say here, Control B. Like that. And then now you read the question. Read the question. Then now you come and read the question. So when you read the question, what are we being told, ladies and gentlemen, here? For NPV, they wanted us, to simply plot a graph of the NPV profile given the WACC ranging from 1% to 15%. Great stuff. I will get this in a minute. Great stuff. I'll get this in 1 minute. I'm a bright student. So once I've gotten these total cash flows, now I'll come somewhere here and do an NPV schedule and a graph. Great. I can't get a fail in BDA. No, the easiest paper. So we have our cost of capital or WACC. So I'll come and write 1%, 2%, and then I'll come and highlight because it's a pattern formed. I'll highlight the 2, and then I'll be able to come here and use this tail. So come here, move it with it down until you see 15%. Let me know once you guys are able to write that. Let me know once you guys are able to write that. 1, 2%, highlight the 2, and then you move down. Let me know once you guys are able to write up to here. So remember, for those of you who would want to join us for BDA, our number is 0719 525 000. And our pay bill, if you're writing down our pay bill, first of all, let's start with phone number. If you're writing down 0719 525 000. Pay bill is 6242 839. Account number BDA. Amount is 9,000. So I repeat this, Control Z. What I did, I wrote 1, Shift 5 to write percentage. Then I came and wrote here 2%, 2%. Then I came here and took this, and then I held this by the tail, dragged it down to 15%. Then they want NPV schedule, so come and write here NPV, net present value. So start by saying equals because NPV is a functionality within Excel. So NPV like that, tab. Sorry. If I'm the one doing this, I will always go for the easier way. Convert this to a table, Convert this to, so Control T. Where is a data set? Very good. My table has headers, okay. So come here, you say equals NPV. The examiner would really love you if you're doing these kind of things. So the rate is here, comma, values. I'm using the total cash flows. They are here. And the values that I pick for my NPV computation, they must always be fully referenced. So function F4. The values, once you get them close, you say shift plus the initial outlay. I did a mistake. I highlighted up to this big mistake. Escape. Start again. We learn best through repetition. I never get any fear whenever I'm getting mistakes. I like making mistakes as many as possible. So NPV. So remember the rate is 1%, comma. You see, they want value from year one, not from year zero, from year one here. Lock them. Plus, first of all, close brackets. Yeah, you must lock them always. So first close here brackets. This thing is misbehaving. Why? So comma. So we have my values from here. Yeah. So in this case here, F4, shift close brackets. Yeah. We have here shift plus. We add this, which must also be dollarized. So function F4. And then we enter. Now, once I finish like that, there is no problem. What I'm seeing, ladies and gentlemen, here is a situation where this is programmed to be in form of percentage. No problem. I will never panic. Panicking is not part of me in my life. I know this percentage. I just need to come here and say number. All right. Yeah, to change everything here to numbers like that. So by any chance, is there somebody who has been able to reach where Mwalimu has reached? By any chance, is there anybody who has been able to reach where Mwalimu has reached? Great. I can see only one student. Great. Thank you so much. Thank you so much. So then, of course, they wanted the graph. So graph, there are so many ways you can use to draw a graph, but why should you suffer on this earth? Why should you suffer on this earth? Use the quick thing, the quick analysis. You say Control Q. So Control Q, this thing is, it's artificial intelligence. You go to charts, then you pick scatter or line, whichever. I'll pick scatter here, scatter. Come and pick this thing, put it by the side. So you can rename this. You can come and use these chart elements. So the chart elements, please always put your axis on. So like now here, these are NPVs. NPVs in Kenya shillings. This one here represents what here, the WACC always. It's right here, the chart elements. So we have, you can call this NPV graph to impress the examiner. Make the examiner happy, you pass. NPV graph. Yeah, and you can see, just again, come back here. Yeah. There's so many things you can do around here, ladies and gentlemen. Chart title, you already have it. Legends, do I need legends? No. That's good enough. That's good enough. I'm good to go. That's good enough. And then you can see the IRR. You know, if at the middle here is 7, IRR will be around what here, where NPV is 0 will be around 6.5 here, where this line is crossing the 0 NPV. Actually, they even asked you for IRR. They even asked you for IRR, determine the project's internal rate of return. That rate of return where the project's NPV is 0. Very easy to get it. I can estimate it from that graph, but the best is to come and just use here. You say equals IRR. You can see it is here. Here you can see they are not telling you values 1 to 10. No, they want all values. So come and copy values from the beginning. You copy values from the very beginning. Yeah, you enter. So you can see it is about 6%. Come and increase the decimals. Increase the decimals a little bit. Yeah, 6.4 something, 6.44. You have your IRR. And if you look at the answers given by CASNEB, because CASNEB, if you look at the answer given by CASNEB, which I'll be able to share with you, yeah. So you can see what they have done exactly. They have our figures 199. You can see our figures here. So like this was the FM solution done by CASNEB. Great. They have in this case here, their thing there. Yeah. Yeah. Great. So that is it. 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 So I believe you guys have gotten value, and I believe now total cash flows. Okay. Repeat on NPV. NPV formula. Okay. Seems NPV formula has a problem. It's the easiest. The easiest. So then assuming you are given cash flows, we have here time 0, 1, 2, 3, 4. And then you're given cash flows here. So for example, time 0, you're investing, this could be negative 10. Time 1, we get 5. Time 2, we get 6. Time 3, we get 9. This one here, we get 10. And then they give us the cost of capital, is say 10%. Then they ask us to get net present value. Very easy. So to get net present value, you start by saying equals, you say NPV, because it is here. You can see NPV returns the net present value of an investment based on a discount rate and a series of future payments, So double click here. So they are asking you for the rate. Rate is 10%. You say comma. Then they want from value 1, not from value 0, from value 1 here. Yeah. So lock them. Remember, once you have finished from value 1 to value whatever, you must put bracket, close bracket. And then remember, the meaning of NPV, there must be an initial outlay subtracted. But you can't say minus, because if you say minus, and this minus is going to end up you adding. So you simply say plus, because plus and minus, it will remain minus. So plus this 10, like that. Then you say enter. It's coming in the form of percentage. Because of this, must have sensed I want to put minus percentage. I will never panic. Never. Come here home. You return this to number or to whatever. It's positive. So the project is worthwhile. The project is worthwhile. The project is good. The project is good. So when you come back to our solution here, you can see even them. If you look at the formula, there is locking. There is locking here. If you don't lock this, you can never be right. So then Control Shift, down arrow, delete. I do this afresh. So equals NPV. The rate is 1%, comma, values 1 to values whatever. These total cash flows values here, they must be locked. So function F4. Values must be close to the brackets. Then you say plus the initial outlay, this 520,000. Lock it. Function F4. Lock it. Enter. Then you have everything there. Then you draw a graph. Ladies and gentlemen, I think if we stop there now, I mean, I will have done my work perfectly. We sleep happy people. And ensure that you repeat yourself pretty fast. Don't repeat like after 5 days. Repeat like immediately. Karen, you will need us to go through this locking as a separate session. Separate session is quite a huge thing. Yeah, but you'll understand it. You'll understand it. Constants must always be locked. So thank you so much. And I hope, ladies and gentlemen, or you want my number. My number is 0721 620 183. But don't call now. We are quite late. It's quite late now. Great, Sammy. Great. That's my personal number. School's number for purpose of registration 0719 525 000. So please make RCM to be very, very, very popular for BDA. Ensure you are bringing our students, guys. Bring our students from all corners of East Africa. I want to have students from Southern Sudan, from Rwanda, all over, and then we'll be able to show you great, great stuff. We should break a record this time round. We should get 1,000 students. 1,000 students. My personal number is 0721 620 0721 620 183. That's my personal number. This one is going to YouTube, Sherry, immediately after this. If you check after an hour, it's going to YouTube live. Joshua Aura is my YouTube, the one that has got about 45,000 followers. Yeah, and the best thing, by the way, also LMS, we shall put it there, yes. We shall put it in the LMS. And the best thing is to mimic Mwalimu. Just mimic Mwalimu. Do exactly what Mwalimu is doing. You watch the video, and then you keep on doing what Mwalimu is doing. You'll become perfect in this. You'll become perfect in this. Have you guys enjoyed today's session? Have you guys enjoyed today's session? Thank you. Thank you. And please don't hate me because I know some of you have seen dust. Welcome again. You'll be, thank you so much. Okay. Bye. 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 And say hi to your family members. Bye.